Hey, welcome to Exchange. Let's check out this lumber index overall. So this is lumber's future contracts. Just like we have oil contracts in the future, same thing. This is like the smart money in Wall Street saying, but it's been a huge volatile overall environment. Right now about 889, which we had the big spikes pre-summer 2021, another big spike going into Q4 of this year, all the way up about the March timeframe was the last real big high. We were actually on a massive downswing. So the 1 month chart right now, we're at about a 40% decline month over month. So I mean, it's just a massive decrease. You think right now, like commodity inflation, everything's inflating right now. I mean, lumber's the exact opposite story. It's almost like a headwind, or basically a forewarning telling us like, hey, commodities are not going to go up forever. There's going to be some downside risk there too. And that's what we're seeing right now because they've been at sky high prices for so long. Where supply chain now starting to catch up a little bit. Maybe not long term, but we'll see what's going to happen in the long term. So this is a great article from the Financial Post. It's based on Canadian logging, which is not U.S. logging, but it's actually kind of similar to kind of basically pain points. So really initial COVID outbreak happened. The really pain point was, hey, getting the logs to the mills and getting the mills to cut the logs with the labor they had on site, and then get those finished logs or finished, like we say, like lumber 2x4s to the actual end consumers or end users, etc. And really what's happened now is actually the mills have actually caught up quite a bit, both in the U.S. and in Canada as well too, which is a major U.S. Basically wood importer, lumber importer. But what's happening now is you have this build of inventory at the mills themselves, and the problem now is taking it from the mills, whether it's by train or by truck, from the mills to the actual distribution centers or end consumers, etc. That's really where we're at now, which is a whole different problem. So if you're a mill, you'd be like, hey, we have plenty of inventory. We don't need to keep building and build, or like keep cutting wood and tree after tree after tree. Now the problem is, hey, how do we get the wood that's actually already finished, ready to go to the actual sites where it needs to be used by the end consumers themselves? And that's really the challenge we have now. But when that problem is fixed, it's gonna be a wave of lumber coming to the market. That's what the market's seeing. That's why the price is so low and it's crashing so fast right now. But they see that last basically on inventory on the horizon, it's going to be here by the summer, and it's going to be a very massive shock to the entire market overall. And then on the flip side, you have another problem too. Basically, as interest rates rise, and the 30-year treasury or 30-year mortgage goes above 5%, it's going to drop demand down. And also, as demand drops down, basically the wealth effect, people feel valuations maybe top out eventually. People feel poor overall, basically on their actual assets themselves or personal assets they actually have. And then from there, all these DIY projects, basically like where you remodel your living room, remodel your kitchen, add rooms to your house, etc. That might stop entirely. There might be a massive slowdown as people get very cash conscious and be like, hey, this is too expensive. Maybe we should wait for a market downturn or wait for lumber prices to come down even further. So it's one of those things where it's a compounding effects on top of each other, might affect the entire market overall too. So looking at lumber itself, it's almost like a forewarning of the housing market itself there too. And if it can roll over that fast, it shows you, hey, housing valuations themselves are at risk potentially to roll down with it. But we'll see what happens in the future. I mean, this is not a forewarning. I'm not trying to scare anybody here, but it's definitely one of those things where it surprised me. Hey, if you like the content, hit the like button down below. Be sure to sub to the channel overall. I'm also going to drop the Financial Post article in the comment section. That way you guys can read it on your own time. I think it's very, very interesting. But yeah, that's the exchange.